Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to look at some commodities. We're going to look at some ratio charts, get you guys up to date on how these things are interacting with each other, what the big picture view looks like for commodities. I've got lumber, nickel, palladium. We're going to look at all this stuff. I'll give you my opinion on it. Again, this is just my financial opinion, but let's take a look at the charts and see what's going on here. So I've got lumber up, and lumber is ridiculous because if you take a big long-term picture like this, you hit this thing from the mid 90s, hit. It's hitting this resistance line and created this massive resistance. And we broke out in 2017, we're going to run, but then the C19 came. And then boom, we blew out to the upside and we're running to the upside for lumber. Remember, we're in an expansionary phase. We're probably going to see upward pressure on wood prices or lumber. We've been moving on up, and this still looks good to move on up. We've got nice, good buying pressure here the last 2 days. So it's looking excellent for lumber to continue its move higher. It looks very strong. And I thought, everyone was using lumber as the gauge for a for the strength of the economy. We blew up to the upside. They said, "Oh, it's all good, no worries. It's falling back down." And here we go, continuing to move higher. And I think this is going to continue to move on up for a good long period. I don't know what the pace is going to be, but I can tell you we're in an expansion phase of real estate, which uses more material inputs. And if energy goes up, we'll see what happens. Nickel's got this increasing or ascending wedge, I should say, an ascending wedge. But sometimes these break to the upside. If this breaks to the upside, you could see a violent move to the upside, a very large break. So this is one I'm watching. Here's the daily. We're hugging the upper end of this channel. And usually whatever side you hug is the side you want to break on. So we'll see what happens. I'm not going to make any sort of projections here on which way this thing's going to break. But if I were to make a guess, looking at all the other commodities, I would guess this would break to the upside for nickel, which, it coincides with higher demands and the market deficits that nickel may face in a couple of years. Now, this could come and blow to the downside and have a consolidation period before the big move a few years from now. So that is possible. I try not to project. I just let things happen, and I position my accounts accordingly. And if things come down, I cost average in some more, looking at it as a buying opportunity, not looking at it as this is going to be down forever. Palladium's had a very nice run off of its bottom. It is coming off of an ascending wedge, which is breaking to the downside. We could see this even come all the way back and do a retest of this guy coming through here. And I'll extend that out. That's $830. Remember, palladium usually is cheaper than platinum. Cheaper than platinum, not more expensive. And right now, we are far more expensive. We're at about $19.50 on the price of palladium, roughly. And we want to identify these big basing patterns where we're breaking. That's where the money's made. I've got coca futures here. We're still inside this big old pattern that's got higher lows coming up into a resistance line eventually. This is signaling, I think, an energy crisis that could potentially come, but we'll see. Wheat's already taken off. It's going vertical. So wheat's already, and it's kind of, if you look back here, we had this nice resistance area. And we are above. When you break this resistance area above here, you get moving. You get the boost of the turbo going. Here's soybeans. Soybeans has that same type of resistance through here. You can see we broke out above that. Now we're coming into this resistance up here. We're probably going to see a big old move higher. Here is corn futures. Good old corn. What I see here is a resistance through here, which turned into support. So resistance this way, support this way. And then we're going to have another kind of area up here where we're going to have some resistance support. Here's copper. Copper's looking good. Zooming in way on the right-hand side, we're above this pattern. We broke out, we did a retest, and I think we're going to see a move higher shortly, most likely. That's the PPI. PPI index is rocketing higher. November was the last thing. This is the CPI just rocketing higher. Looking at some of the ratios, CRB to SPX. I'm gonna fly back into the candles. Backing out, this is what it looks like for a ratio. I don't do logarithmic for ratios. Coming on down, we broke to the upside of this pattern just recently. Broke to the upside, we're hanging. We could come and do a retest. That is very well possible. But I think we're going to find some support here and start moving on up for the overall CRB index to outperform stocks. So I'm looking for a sideways to higher movement for the CRB to really get fired up here. This is platinum to gold ratio. We've got a nice good, I probably drew this in incorrectly here because we got to yank this thing down just a little bit more. Something like that right there. This is the platinum to gold ratio. I see platinum breaking out, doing a retest, and then I think we might see a move higher in platinum. Platinum is one of my favorites. This is an incredibly cheap ratio for platinum. So this is an anomaly in history, being down here and as cheap as it is. Platinum to palladium ratio, it's been moving on sideways. Let's zoom in on it. We're at 0.5. It's been bouncing. It's trying to break out. We have an incredibly cheap valuation for platinum. 0.5 is unheard of in history. I mean, we got down to 0.6 last time, and it just rocketed higher. And this here, we had inflation. 98 was our buy signal, 98, 99. This was through a buy signal to be buying this commodity in this region here. And if you notice, you'd have a good about 2 or 4 years to accumulate, and then you have a massive run higher. And then the eventual top. Wave 1, wave 3, wave 5, and then this is sometimes they do this thing, and sometimes it goes up high, sometimes it only comes to here, sometimes it comes down here and it doesn't turn. So the sell would actually have been in this region here at about 5. And you would have gotten about a half to 5, which means you'd get 10 times your metal buying platinum and swapping to palladium in 2005. You would have done a 10x in metal. So rather than buying palladium here, you'd buy platinum, you'd swap your palladium, and you'd get 10 times your metal in palladium. And then we would be riding it back down to here, and I'd be swapping to platinum in this region here. And that there would have also been a 10x on the other way around. So it's 10 times your metal up, 10 times your metal down, 10. So, well, one round trip, I should say, is 10. So if you bought platinum, you'd have 1 ounce platinum, 10 ounces of palladium, and then 10 times 10 is 100 ounces of platinum. That is insane, guys. That is 100 times. Yeah, it's 100 times your metal. Or no, hold on, no. I said that wrong. I'm sorry. 1 ounce, and then if it's 5, you get 10 ounces of palladium, and then this would be 10. No, that's right. Oh my goodness, guys. Because you would have done 10 divided by, you would have had 20 ounces. 20 ounces. So 20 over 1 is 20 times your money. It's not 100, it's 20 times. 20 times your physical metal. Sorry, guys. That's an insane amount. Platinum to silver ratio, it is very low and favorable platinum. And when zooming in here, we're right on this kind of upward trend. I don't know if this is going to break, but we'll go to the 1 year. We're playing with the lower line right now. I mean, this still could be cheap, and silver could outperform. We got a lot of buying pressure and small selling pressure through here. So I would suspect by looking at the candlesticks movement, the buying pressure versus selling pressure in here, I would say it's favorable for platinum to outperform. Platinum usually outperforms in the beginning of a bull market. If we were to look at last bull market, it outperformed in the beginning of that bull market from 98.99 all the way till the peak of 2003, 2004. You'd want to swap your metals up here and ride it all the way down in that next disinflationary period. Silver does really good on the back half of a commodity bull market. So we might be early for silver, but platinum, I think we are timed very well to move on higher. Gold to silver ratio, it's still favorable gold at the moment, which means gold's been outperforming in the very short term. But I do suspect this to turn and go and head lower as this bull market progresses in commodities. So we're kind of going to squeeze up, and I think we're going to break down. But I mean, it's possible this breaks up. I don't know the future, but I'm a silver bull because of this breakdown lower. And I bought all in here massively, thinking it was a huge buying opportunity, which it turned out to be true. Palladium to silver ratio. I suspect that this would eventually turn lower. It's in a consolidation period. And eventually this will break to the downside, meaning that silver will outperform palladium in the future. Meantime, chopping sideways. We definitely have a top here at 170 ounces of silver to 1 ounce palladium. Dow Jones to gold ratio. I'm looking for this to go lower, which means gold will outperform the Dow Jones. This was a 65 to 1980 period where gold outperformed in that period. We had a commodity bull market in that period. We also had a commodity bull market from 99 is where I would have been buying gold or silver or platinum. Probably platinum is what I would be buying. Coming all the way down, we had this phase in here was a phase of a recovery phase of real estate. Same with this phase here was a recovery phase of real estate. And then we went back into an expansion phase. If the expansion phase is coming, this is going to draw lower and downward, just like all of these other periods. Looking at the gold to oil ratio, we are still at a pretty cheap ratio of 24, about 25. This is the ratio moving sideways. The last bull market was back here in 2008. It got to a low of about 7. 6 or 7 was the low here. It went all the way back up to almost 30, but we weren't in the right conditions in here for a bull market. This is a capitulation bottom. This is where I went crazy, foaming at the mouth, buying oil like it was going to go out of style. I was buying it right here. This is when the companies looked absolutely excellent to be going long in for a big move, and then you can see oil took off. I suspect that this ratio is going to compress and continue to compress to the downside, breaking out of this pattern, and then eventually breaking out of the long-term downtrend line and squeezing down below 10, maybe even to 5. And you're going to see a beeline lower at some point. That point, I can't tell you, but it's going to work its way lower over time if we are in a commodity bull market. Copper to gold ratio. This is highly correlated to the 10-year yields. We've got this big old downtrend coming. That is the downtrend line, 40-year downtrend. Think of it that way. And I think we're going to be shifting. And if this breaks here, I said the break, if this breaks to the upside of this big old resistance line, we could see a very big move that doesn't come back. This one came back because we were still in a disinflationary period. This, I think, is going to be a little bit different, but you know what? I don't know that for sure. That is my guess. But I think interest rates will try to follow this up. If they hold rates down, they're just going to be buying massive amounts of bonds to hold this thing all down. And I think rates will go higher because people will get afraid. We could have a debt crisis. If we have a debt crisis, rates will rocket higher. You better be in the physical metals if that's the case, because they're going to be gone at that point. But if this moves on up, and is strong, we'll see copper outperform gold, which is going to do wonderful things for copper companies, because it's going to be the one that's going to be outperforming. Looking at the CRB index, just to show you guys, we've got a nice, I've got a capitulation move signaling a bottom there. We've got a nice good move higher, and we've been working our way higher here. We've got a breakout, nice clean breakout. There we go. Logarithmic is what I prefer. And then we're going to see this thing move to the upside, I think, outperforming. Now, it doesn't mean that it just goes straight up. Please don't think that things are just going to go straight up. You should know by now that a lot of these things are going to cycle back and forth. They're going to try to buck you off this bull, but we've broken all these resistance lines. We're coming on up. This is going to cycle its way higher. It'll cycle. Don't think that it's a beeline straight up, that it's going to be some easy peasy hold. You got to, it's going to work its way higher. It's going to have pullbacks every once in a while. The market will get afraid. It'll sell off, and that's when you get your shares and you accumulate for the bull market in commodities. And then we got the 10-year yields. Here's the 10-year yields on a big long-term perspective. Looking at this way, we're right there trying to break to the upside. We broke in 2018. This had problems. This caused a lot of problems, guys. This here was the commodity start. We were ready to go and break higher, but they had to come in, do QE. There was things breaking in the system from what I understand. And all of a sudden, C19 came about somehow, miraculously. And then they printed many trillions of dollars. But we're right there trying to break through this area. We've got resistance there. We're at a critical point. It wants to go higher, but they're trying to hold this all down. I don't know which way this thing's going to go. The pressure is for higher rates. So I wouldn't be, I'm not betting against rates. I'm not going to do anything with rates. I'm going to stick long with my commodities and try to ride this thing higher. But that's the dynamic that's playing out in the 10-year yield. These are yields. Higher yields means that money will want to rotate. It's going to want to rotate differently. Man, this is there we go. There we go. I don't know why I had that. Jeez. Probably drew it in there. I couldn't. Came up, broke down, did a retest, and then broke down. We're going to do the same thing. We're going to break out, retest, and then gone. But that's what I've got for today. Just wanted to let you guys know kind of what I'm seeing. I think they look good. Commodities look good. They look solid. The ratios are changing favorably for a commodity bull market. And that's what we want to see. That's what we want to see. So if you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.